All right. Welcome to the official kickoff event of HypeRocket. And thank you very much to all of you about the launch, not lunch, launch yesterday. It was an amazing launch. Over 1,000 registrations that happened, more than thousands. And we are now more than 2,000 people that are invested, that are participating here. And I want to say thank you for that. So it was a successful launch. And we have right now here also already more than 300 here in the live webinar. And yes, so therefore, I don't want to waste your time. So first of all, I will explain the business concept shortly of HypeRocket, right? And then I will pass the stage to the CEO. He will more explain how it works because I think that's the most important what you want to know. So how he is generating the money or how he is generating the value and so on. And yeah, so therefore I start to share my screen. Sven, can you give me feedback? Do you see my screen? Yes?
Yeah.
Yeah, okay. Okay, short introduction to me. My name is Sergey Heck. I'm a blockchain and network marketing expert. Originally, in 2013, I became a diploma engineer in mechatronics, and I worked for Mercedes-Benz in Germany. Later, I became an entrepreneur and became an online marketing and network marketing expert, where I created over 500,000 partners in for different businesses. And later, I fell in love with crypto because I'm as well as an engineer, and I founded Blockchain Hero and Coin Korea in Switzerland. So these are German-speaking blog articles that where you can educate yourself. And then later, 2019, I founded ChainClass, and ChainClass is one of the largest international crypto education companies. It's still running until now. So and since 2023, I'm a marketing advisor at Bitopics and as well now at HypeRocket. And also since 2023, or no, even earlier, since 2018, I met Sven Möller, so he's the CEO here, and we met us in Davos at the World Economic Forum, and since then we often met, just communicated about business, and since 2023. I started also as a marketing advisor at Bitopics. So here Sven is trading Bitcoin and Ethereum options since over 2 years. So you see that he has here an amazing track record since May 2024 until now with a ROI of over 122%, and only in the Bitcoin strategy with over $4.9 million, right? And in the last months, with the rise of AI, Sven could manage a lot of more back testing or testing a lot. He can test a lot of strategies in the last months, and he also started to trade the Hype token. Yeah, because the Hype token is one of the successful projects in the crypto space right now. So it's called Hyperliquid. So Hyperliquid is a number 10 of CoinMarketCap with a market cap of $10.2 billion. Okay. And it has great tokenomics because 97% of all generated fees are buying back the Hype token and burning them. Okay, and also it's the biggest DEX exchange right now. So if you go on CoinMarketCap on derivatives, you see here on DEX number one is Hyperliquid. Okay, so it has, and because of the tokenomics, the chart of Hyperliquid is much better than the Bitcoin chart or Ethereum chart or any other charts. So therefore, it's easier to trade. And this is how HypeRocket was born, because Sven and his team, they could also launch here a third strategy, but instead of that, we we talked with some leaders, and we decided to create a project more for the online marketing and the network marketing space. And this is how HypeRocket got born. Okay. And here, and how it works. So you can invest here so it contains two pillars. The first pillar is the investment part, where you can invest USDT or USDC here and get daily returns up to 0.5% until you reach 250% ROI. So this is the first part. And the second part is the affiliate part, where you can get four income streams of Unilevel, matching bonus, infinity bonus, and the streamline bonus. And this I want to show you quickly. So the affiliate plan in short is, we have here the Unilevel bonus, where we pay out 11% of the deposits over 15 levels. So first level 4%, then 2, 1, and so on over 15 levels. Then we have additionally the matching bonus on the profits, also over the 15 levels, where we start again with 4%, 2, and so on. So it's a daily passive income on the daily profits, right? So also amazing boni. And then we have the infinity bonus in the infinite depth. That means we have here 10 career ranks from starter to ambassador, where you can get up to 50% commission to your whole downline commissions in unlimited deep. Yeah, so that's very important. And that's maybe also, it's also very important, we have additionally a streamlined bonus. It's an early adopter reward. That means the earlier you start here, so the first 20,000 depositors are participating from a 1% global turnover pool. And yesterday, already over 1,000 depositors reached. So the first pool already is filled. And now they are the second pool, the third pool, and the fourth pool left. So if you are becoming now one of the 5,000 depositors, you will participate the whole project in the second, third, and fourth pool as an investor. And that's even, you don't need to build even a team, right? So that's an amazing opportunity for every one of you. And yeah, this is how this type of bonus is working. And how you can participate, I want to quickly show you. So you create an account, and then you can log in. And this is how the dashboard is looking like. Yeah. So then you can easily just click on deposit. You can invest with the USDT on Ethereum, Tron, BNB, and Solana. Minimum investment is $50, and that's it. Yeah. So this is how it works. And then you can withdraw in the Hype token. And then you're also participating on the performance of the Hype token if you withdraw them. So yeah, this is basically the concept, how it's working. And yeah, I wanted to quickly introduce it to you. And now I want to pass the word to Sven. He will explain you more how it works, how he is trading the Hype token, and how we profit from or benefit from this ecosystem. Sven, the stage is yours.
All right, thank you very much. First of all, excuse my voice. I'm a bit like sick, so I hope it's fine. And maybe not that energetic, but I try my best to explain everything in detail. So you should be able to see my screen now, right, Sergey?
Yes, we see it.
Okay. Okay, Sergey, quickly introduce myself. Maybe I go a bit in detail, just what I think is important. So, okay, I'm originally from Germany. I moved into Switzerland, and I started my career in consulting in finance. And I mostly worked in asset management, consulting, topics like Basel, solvency for insurance, which is the equivalent, data warehousing, different calculations with derivatives and so on. And also, I was leading at Ernst & Young, which is one big consulting and audit company. Globally, I was leading a team called Garage Labs, where we, like in the early days in the .com, where everyone founded his company in the garage. introduce new technologies to funds, to banks, to insurances. And here we showed them all what's coming up in the financial industry, from blockchain to AI, which was not called AI in that time, machine learning, and different things in data analytics. And one topic was blockchain and cryptocurrency, around 2 to 16 to 15 already. And we got many clients in that area. And then one of our clients, Swisscom, who's also serving a lot of banks, wanted to make a new company, which we then founded. I was also shareholder in this company. After 2 years, I sold my shares and left that. And since ever then, I work as an entrepreneur. Had projects in South Korea. Most of you maybe know BitOpix, which is a crypto option trading platform where we're also doing copy trading, but also for many years we're doing trading, so-called quantitative trading, algorithmic-based trading, which I will explain in detail, and of course now HypeRocket. So Sergey already said why we are in the hyper liquid ecosystem, and he explained already, but I want to add some words from my point of view. So I think it's a really good ecosystem to be. Every one of you can research that. So we're talking here about the trading platform and exchange where you can trade cryptocurrency, and also since a couple of months commodities such as oil, and soon also prediction markets. So like where you can basically trade every event, how will be the weather tomorrow. So it's quite popular already, but it's not yet on Hyperliquid. And so let me go back to my screen. So the biggest competitor is Binance. So everyone who's in crypto probably heard about Binance, and Binance has also its token BNB. And you can see it's currently at 621 and has an 83 billion valuation. And Hyperliquid is $39, around $40, and has a 10 billion valuation. And so there's a big fight in the blockchain industry, and it's mostly about. Sorry, I think you need to let in people always when they're in waiting room. So there's a big fight. Who will win? Will win central technology, such as Binance, or a decentralized technology? And step by step, decentralized technology is taking over. Still, Binance is still leading, but you see it's growing quite fast. And as Sergey already showed, Hyperliquid is already the biggest DEX. So if we're looking into the valuation of Hyperliquid and compared, like, okay, I have a 10 billion valuation compared to a 83 billion valuation in a bear market, we kind of see the potential of the Hyperliquid token. And it's even more because you can see here, we are now in a very bad market for crypto. So we declined a lot, but on the last high, Binance had a valuation of 180 billion. So, and on top of that, Hyperliquid has a better tokenomics. So Binance incentivize users to hold their token, but it's not burning the token based on the trading fees. So they keep the trading fees mostly for themselves. If you hold tokens, you get a discount. But on Hyperliquid, most of the trading fees which are generated are used to buy the token and destroy the tokens which they bought. And if you're now taking all this in consideration, there's a chance that Hyperliquid will be getting more close to Binance valuation, and maybe even one day take it over, right? As the tokenomics is better and they betting on the new technology and the market leader. And if you compare it from the current valuation, Hyperliquid could then reach 8 times the valuation. But if you look into the bull market, we could even talk about 190 billion, which would be like a 19 times higher valuation, right? Of course, it's like quite high numbers, but this just should give you a glimpse or an idea of why we're betting on this ecosystem. So we're betting on trading infrastructure in the DeFi space. We're betting on the market leader because we think they do the best products. And even though it's already quite high in the ranking, we still think it's highly undervaluated. And if you compare it with Binance, it has a lot of room to grow. And even with the better tokenomics, it could even have a better valuation than Binance in a similar situation. Okay, and the core idea was, okay, Hyperliquid is a good asset. We want to have a lot of Hype token and we want to hold that. till, like we're getting more close to Binance, and of course, hopefully make a good investment with that. But what can we do in the meantime? So we came to the idea, as we already trade for many years, and we have quite an experience with trading derivatives, we could develop trading strategies on top of Hyperliquid. And these are like, of course, the results from our testing, and then we run them on a test account and so on. But as you can see, the results are also quite good, and also much better than my usually trading strategies. As you saw in Bitopics, we do maybe a couple of percent, maybe even only 1% per month. But Hyperliquid even achieved, our trading strategies achieved this year so far, taking, not even considering the growth of Hype token, around 50%, and it's now already more. And this also has a connection with the Hype token, right? Because trading in trading, you always trying to take advantage of a move, and if a asset moves better and more good, you can generate more profit. This additional profit is in trading called alpha. So on a strong asset, you can make more returns, right? So that's why always in the past, people wanted to trade Bitcoin, because on Bitcoin you can make more returns than you can do on the S&P 500, because Bitcoin move more strongly. And now, as you saw, Hyperliquid is still in its early days and already moved quite strong. Like from 10th of October, we had 100% recovery. It's a very good asset to trade at the moment, and for sure for the next year or maybe even more. And so that's why we started to build strategies on Hyperliquid, and I will go in detail what we're doing here. I just wanna, let me maybe show quickly what we're doing here. So yeah, so you see, we basically trading all the time, and we're holding US dollar and hype token. We want to accumulate hype token, but this not necessarily mean that we're holding hype token all the time and with the full amount of what we're trading. So of course we want to, let's say, buy low and sell high. But in addition to that buy and holding strategy, where we have certain points where we sell and buy, right, and trying to take advantage of the performance, we also do so-called futures trading. Futures is a derivative, so where we can go long and short. So we can have a negative balance and a positive balance. And basically, I will go in detail what we're trading here, but we're doing a lot of trades. And okay, this week it was more flat, so we started to have like today better movements, and you see like it's like it's better in return. Of course, we have also a bit like a fluctuation here in terms of hype token, right? So if the hype token goes down, we're a bit losing of our portfolio. So we're switching between US dollar and hype token and so on. But so if I go to the next screen, or I can also go here to futures, right? So it's the same account. All right, let me load it. It's need a bit of loading, but so you see that's of today, right? So you see every red dot is kind of like a short, like we sold hype token, but also we can have a negative balance. I think right now we have a negative balance of minus 264, right? And the P&L is plus minus zero. So if we now move like $1, we make I don't know, $260 profit. But of course, you see we have constant trades. I mean, not every second, but we have like up to 50 trades per day. It can also increase, it can be less. And what you can see here quite nicely is that we have different algorithms. And again, I will explain the details, but they trading constantly the token. So when we like in a sideways movement, it's trying to do like a sideways trades. And of course, when we have a downtrend, it's trying to do more shorts. Sometimes it's fixing the profits. But you see now it's increased like about $10. I mean, it's not that much, but we're doing many trades with like a lot of small profits. And maybe you can see here, here's a phase where we tried to go long because we had an uptrend. And here we had like a downtrend, we accumulated shorts and so on. And sometimes you have not that many of trades, right? So it's depending a bit, the algorithm will decide all this. But how this works I will explain now in my presentation again. So what we're doing on the trading side is so-called quantitative algorithmic trading. Maybe you heard already about algorithmic trading, and algorithmic in the sense of that we have have a computer program which executing the trades automatically. And quantitative means mathematical based. So we're using statistics and math in order to decide when we do a trade. And I will go here in detail. We're using in some parts AI, but it's not like we connect ChatGPT with the trading account and let it do. It's already in. We can use AI to improve our work and our trading. And where does this coming from? So it's coming from funds like Renaissance Technologies. So Renaissance Technologies, founded by Jim Simmons, was a mathematician who first time thought, okay, in charts there are patterns, there are statistics, and I can use math in order to take advantage of that. And of course, it's with that they have been very successful. It's the most successful hedge fund in history. They not even take any money; they only trade their money on the money of the employees, and it's doing an average 66% on the stock exchange, which is moving not that much for the last 30 of years. All right, so and I would like to, so maybe many of you heard already about and met already a couple of algo traders, and I want to quickly spend some minutes on, explaining the difference between a quantitative algorithmic trading system and like an algo trader. So they're like algo traders, and probably you met already some. They usually have like a one strategy. Most of the time, they have like one strategy. Maybe they have a couple of handcrafted strategies, right? But in our case, we have an engine, and it will be explained in the next slide, where we generate thousands of strategies based on patterns which we created before, and these going through a process. Usual trader, their biggest problem is so-called overfitting. So overfitting is you found something in the data which looks great, but it's actually not a strategy, it's just coincidence, right? So they usually show you a backtest, and the backtest looks amazing, but when they start trading, it stops very fast to perform or even start to lose money. So, and this is due to overfitting, because whatever you find in the historic data can be either a strategy or it can be either just coincident. So let's say if you won the lottery, right, then you was just lucky, right? Because you choose the right numbers at the right point in time. And there are all even people who won the lottery twice, right? So, but this does not mean that they have a strategy which predicts the lottery numbers. This means just they have been very lucky and they choose the right numbers at the right time twice, right? So, and of course, it's not really possible to predict a lottery numbers systematically, as it's just random numbers. And this effect also happens very often in trading, where people trying to find a strategy and then compare it to the historic data, and they see, oh wow, it's make profit, but actually it has a high risk that it's just overfitted, that they just found the right parameters which are by coincidence profitable, right? Or they even trying to optimize them in a way till they are profitable. So, and there are ways to eliminate this overfitting risk, like walk forward testing or Monte Carlo simulation and so on. Then a big topic is, of course, the risk management. So how do you stop a trade? How much risk you take per trade? What is the size of your position? Do you use any execution algos for stopping or starting your trade? In our case, we're using ATR-based formulas. We analyze everything on the floating balance drawdown. We use correlation filters between the different strategies to make sure that we also have different results, right? And another problem, what most, let's say, average traders have, is the market condition or the so-called market regime. So every one of us know you have sometimes a bear market, you have a bull market, you have a sideways movement, right? So you have a trend. And this condition of the market is called market regime, right? And for example, if you're trading a trend following strategy and the market goes sideways, this strategy is losing money. So you need to find a way to detect sideways movement and the market regime. There are models which can be used for that. Historically, hidden Makarov model is quite popular. And these days, we're using AI in order to detect in which market phase we are. And actually, this is a big difference because most traders trading their strategy on every market with the same risk and don't filter if this regime is good for their strategy or not. Also, of course, what is very important, automatic execution, self-monitoring and self-correcting. With self-monitoring, I mean, if we have a strategy which stops to perform how it should, it will be deactivated. And the system is also self-correcting it in the way that we adding like a different new strategy to replace it. Then, of course, usually you're working a lot with such indicators like RSI, MACD, like kind of basic indicators, what you learn in every trading webinar. So we're using also such indicators, but more in the context of fitting the model of our AI system. But the AI system is not really deciding on the trade. It's more like automating work, improving work, detecting patterns, and I will explain it now in the next slide. So as I said, we're using AI to generate thousands of strategies. And I think this is really the core part of our success. So in the past, when you wanted to find a strategy, you had to research the market a lot. You then maybe saw by eyes or by statistic that, I don't know, if the RSI is like this, you could do a long, or if you found this pattern, it has a higher probability to have a profitable long position, right? So, and we have already from our work many, let's say, patterns, right? So we have already trading strategies, like kind of like a templates, and we implemented all these templates and combined them with machine learning. And what the machine learning is doing now is it is then generating thousands and thousands of strategies. Basically, try every possible form of this template, trying it with different indicators, trying it with different time frames, trying to find profitable setups. But again, I explained you in the previous slide that usually in such cases, you can have also high risk of overfitting. So when we then generated our thousands of strategies, they going through a process and running through different tests. Most importantly, I would say Monte Carlo test. It's like a very good way to either optimize a strategy, but also to find out if it's overfitted. So what does the Monte Carlo stress test doing? So if you have a parameter, let's say RSI is 90, then I go long, right? And this strategy is profitable in the Monte Carlo stress test or Monte Carlo simulation, you would take this parameter, or if there are several parameters, and change them slightly and see if this changed the profitability or the loss of the strategy. So if you have like an overfitted strategy, if you change the parameter just a little bit, the profits will disappear because you just found by coincidence the exact parameter which is profitable at this with this historic data. But if it's a good strategy, you get something like a heat map. So even if you change the RSI parameter a little bit, it will be still profitable. Profits will change a bit. So it will be looking like a heat map, like a temperature, right? So this means that you really found something in the market. You really found some pattern. So this is a very important test in order to find out if it's overfitted. Then we're also doing walk forward testing. And the walk forward testing works like a back test, but we use the results of the back test to run it on another part on the market, another time frame on the market, and then we again use this result and make another run. So it's like an iterative back test in order again to make sure the results are good, that they're working, and that they're not based on coincidence and avoiding overfitting. Then after that, maybe we are left with 80 strategies. And these 80 strategies we're putting then in a test account and run them for many months maybe first on paper trading and then on real money. And this is what I want to show you. So here I have another account. So you see this only like a 20,000, but this is I call it our strategy kindergarten. So this is exactly here when we have like an active portfolio of 30, 50 strategies where we run them in the live testing. And you see here compared to the other account. So now it's need to load because we have here many positions and many orders. We have here 19 different positions. And this is because we're trading here a lot of strategies or a lot of different assets. So even one asset has several strategies in order to get data for the real testing. And this account runs already for a year. Of course, we're changing strategies, we're adding new. So this is just for us to generate data, right? So like here you see we're running here Solana, perpetual, and you see many, many trades, longs and short, longs and shorts. So you can see definitely we're running here some swing trade strategy. You see here shorts building up when the market is going down. So we're running here also so-called trend following strategies. And here in this so-called kindergarten, we really observe the strategies on real market, of course, on small amount of money, couple of hundreds of dollars, right? So we're trading here on total all strategies with $20,000, and to get the data if it still behaves like in our mathematical models, or if it changed something. And of course, there are additional optimization steps what we take. And these strategies run then here very, very long. So before we apply real money on that, it can be even that they run for half a year or 3 months and so on. And of course, also some strategies which we run here in the kindergarten, they have like a bad result, and then we find out, okay, that's maybe not where we can apply real money, right? So and this is really like a crucial process. How do we come to our portfolio? Then I said we're using AI. So one way to use AI or machine learning, which it's kind of a similar field, is to where we generate the strategy. So in the past we had this model, right? We make this more or less manual. You can build a tool, but now we're using machine learning to kind of hyperscale the process of finding, researching strategies and testing them and so on. And the other part where we use AI is for regime detection. So, and also we build like an indicator for drawdowns, but it's basically the same, right? So if you have an indicator which says now you have a high risk of drawdown, right? So this gives you so drawdown is a loss. So this gives you the information if this is a good market regime for your strategy. And what we use here is something like ChatGPT, but for data. So it's also a large language model, and it's basically take price data and tokenize them, and then it's going to a transformer block. It's the same technology how like ChatGPT is learning. And basically the model, what we started to use is already pre-trained. It's trained on all financial data of all the world, 45 exchanges from Binance and all hundreds and thousands of assets. And this we then trained specifically on our strategies and on our price data, for example, Hyperliquid. All right, so I already said, I think, enough today about testing. I see it's already like maybe difficult to follow, but it's just one more time, it's a very important part. Whatever mathematical model you have, right, you need to run it through, let's say, a quality assurance process. You need to make sure that your results are not coincidence, it's based on a real pattern, and you need to run it through a lot of different kind of tests and validate on a real market before you can use them. And this is what we're doing. All right, and the result is that we getting like a diversified portfolio of several strategies. And these strategies are also in different categories, what working on different markets. You can see here, I put some of the strategies which we're using. So trend following, okay, it's clear. If the market goes in one certain direction, we wanna follow this trend and wanna earn money on that. Then mean reversion, we're using hedging strategies. And of course, also all strategies not trading with the same position size all the time. So depending on the current risk, we increase the position size, and also depending on the performance of the strategy, we change the position size. So just go to the next slide and I will explain you this in detail. So currently we're running 11 strategies on our hyperliquid trading. These strategies are based on 4 different time frames. So you see a rather higher time frames, 15 minutes to H4. We plan to add also like a shorter time frame, so-called scalping. But it's still like in the kindergarten, right? So it needs some more time till we can apply it. And if I go, so I have here this. By the way, during our call, you saw like it got another short edit in the last candle. So during you see it's like all automated trading, and and you see now profit increased by $50. It's not that much, but it's many small trades. And even during I talk, I don't need to do anything. It's fully automated, and we had like another short. But okay, so I said, okay, we're using like several different strategies, right? And these are the 11 strategies which we use. You can see they have like a name, what they kind of describe. They have the time frame on which data they developed. And you see the strategies. So in this graph, they all are like displayed in a way that every strategy gets the same portion of the portfolio. But in reality, we're taking all the strategies and optimizing the risk per strategy based on drawdowns and performance in order to have a more smooth equity curve, right? So let's say if a strategy like this one performs really good and has not so much drawdowns, we give it, of course, more money to trade. And if a strategy performs not that good, like the yellow one, it's getting like less. So it's get kind of a different weighting. And also what is important, so you see like these strategies also can change. So it could be that one strategy stops to perform, and what happens? It's not make much difference. You see, like if I click here, the strategy gets getting out of the chart. There's still the risk then gets distributed to the other strategies, and the strategy getting replaced by new ones. And also, of course, we adding here new strategies and so on. But let's look at one. So you see how difficult it would be if we had only like, let's say, one strategy, right? So if you have one strategy and this strategy, you see like this one is in general good performing strategy. It's make like a 25% and in a let's say a year, right? So and but then it had a huge drawdown, right? Over let's say 10 or 12%. So if I only trade one strategy, I fully depend on that. And if there's a drawdown, of course, like it look awful. But if I add another strategy, so this is perform like similar, right? So you have these strategies. Let's take I'll take like one which is not so correlated. So like this one. So you see this one, when there's a drawdown here, this one starts to perform good. So basically, they balanced itself, right? And of course, we have additional methods also to when a strategy to performs bad, to give it like a less amount of trading capital. And if a strategy performs good, we give it more. And of course, we also have some way to detect if this is a bad phase for the strategy and if it's a good. So this is not optimated data. But what I wanted to explain you is the advantage that we're using several strategy, that the portfolio is diversified. And if one strategy stops to perform or performs bad, it's not like a killer for our trading, right? It just like take some of the returns, but it's usually getting covered by the other strategies. So let me go back and what is our goal with that is to have a really smooth equity curve. So we want to have a constant small profits. Of course, we cannot avoid losses. There will be always losses, but due to the amount of the trades and due to the amount of strategies and the diversification of the portfolio, that we have strategies which perform good when the others perform bad and the other way around, right? So we're getting a very smooth equity curve. This means the balance is growing slowly but constantly. And even if the market condition is bad and we have like a couple of losing strategies, the portfolio can make up for that, and we don't have like a huge kind of drops in the equity curve. And this makes, you saw like the strategy what I showed you, it has like a kind of very huge drop. So if you would only trade this strategy, it would be quite difficult. And but in combination, all of them, we have like a very smooth equity curve, and we don't depend so much on if this is a bull market, if this is a bear market, or if some of our strategies stop to work, right? So you see, this is all based on statistic, math. So we use a lot to optimize that. We use using different mathematical models. We're using mathematical models to create the strategies, and of course, we're using a lot of tests. So this is really all about statistic and math. So is our work, right? And that's why it's also a good job for AI, because a lot of these things you can automate. All right. So one more thing what I want to mention is the hype token. So we talked initially about the hype token, and I tried to explain why we think it's a good investment. So what we're doing on the trading side, we kind of holding also a lot of hype token. In addition to US dollar, we're holding hype token. Sometimes we're holding more hype token. Sometimes we hold less hype token. But this is in addition to the trading. So if the hype token goes up, our portfolio also benefits from it. And if the hype token goes down, in the best case, we don't hold that much of a hype token, right? And the strategies should cover this loss. Like, for example, I showed you the chart earlier. This week was rather flat, but actually hype token declined like almost 10%. And we kind of made up for that loss through our trading and even accumulated more hype token in US dollar. So the beauty is that when we make a trade and we're holding hype token, we're taking a loan for this trade. And if the trade is losing, we have a negative US dollar balance. And the next trade can make up for that. So even if we trade our hype token amount gets not reduced. Of course, we have certain risk limits, what we need to take in consideration, because like a loan also bring risk by itself, right? But in the range of our model, we can use a 5 to 10% of leverage from the hype token as a loan in order to avoid losses and reducing the amount of our hype token. And this is so-called our accumulation strategy. So there's a bit more to it. So of course, we not want to just blindly hold hype token all the time. We also want to sell it at the right moment of time, and we want to also hold it. But of course, it's never possible to do it perfectly. So it's kind of like a special sports strategy where we have where we averaging out our position. Okay, last chapter. It's probably the most boring, but also the most important. It's risk management, right? So when we're talking about trading, and especially derivative trading, a lot of risk is involved. And if you don't have a proper risk management, you can lose all money, right? So therefore, I would quickly spend some minutes on what we're doing on the risk management and probably what we're doing differently. So first of all, most traders, when they create a strategy, they doing a back test, and then they have a maximum drawdown, so maximum loss of, for example, 10%. And even if the strategy is not overfitted, this might be wrong, because backtests usually taking in consideration only closed positions. So you cannot see in this backtest what happened during a trade. So during a trade, it could also be that you had a drawdown of 60%, just the position was not closed, right? So, and this is also kind of a mathematical error. So what we're doing, we analyze everything based on the floating balance. So all our tests and back tests and analysis and models are not based on closed trades. It's based on how does our balance also behave during the trade, right? So we optimizing the drawdown during the trade. So it's in total was only minus, for example, 5 or 10%, right? So this is a very important point. So how do you, and a lot of risk is based around the drawdown, right? Because if you have a 10% loss and 100% profit, that's kind of your risk. So if you want to have the double of the return, you need to take in consideration double of the losses, because you increase the position size. So that's why you need to take in consideration the floating balance, because you want to see also what happens during the trade. One thing what I also explained is the cross-strategy correlation. So you saw we taking 11 strategies, and you also saw some of them behave similar, some of them behave differently. And so we're taking the strategies and we're making a correlation analysis. So we're trying to find out mathematically which of these strategies are correlated to each other or not correlated to each other. And in our portfolio, as I said, we have a diversified portfolio. We want to have strategies which are as less correlated to each other as possible, because otherwise we have just strategies what to trade at the same time, and then we only would need one strategy, so it wouldn't make sense to have like a portfolio of different strategies. So even if you take a lot of strategies, it's important also to analyze them mathematically if the correlation of them is strong or not strong. Then we're using a parameter called ATR. So it's average true range. So basically in every trade, in the position size and in the trailing stop, we're taking the current volatility in consideration. So this means if the market is very volatile, it's moving 5 to 10% in a day, the strategies automatically adjust themselves to the ATR, average true range. So what was the real range of the in the last days, and decreasing the trading size. Then I told you about regime awareness. So regime awareness is we need to detect if we are now in a trending market or in a flat market. And in a trending market, we of course should trade differently than in a flat market, right? If you trade all the time, the same time, then you will run into problems. Then we analyze the daily equity curve automatically, and the strategies also automatically getting removed or added. And about the portfolio budget, it's very important. So as you saw, we're doing a lot of trades, right? So, and all these trades, let me go back one more time, one last time, then you have it over. So you see, like these trades, they're not adding too big of a position, right? So it's of course changing based on different parameters on the risk of the market, right? But you see, we trading here more than 200,000, and the current position is 261. So it's like a couple thousand or tens of thousands of position, and each trade can be like, you see like this trade can be 31 hype, it can be 7 hype. So it's rather small trades. So this means every trade has its budget. And you see, we have a lot of trades. So even if a trade goes wrong, it's not an issue because it's only trade like 0.1% of the portfolio. And even if many trades go wrong, it's not an issue. So it's important to, of course, budget the risk of your strategies. Give them the right allocation based on the risk. And of course, this also need to be optimized. All right. So thank you very much. I think it was a very mathematical content, so not for everyone easy to follow, but I hope I could explain and show well what we are trading, how we are trading, and what is our strategy. Because I think personally it's important for you to understand and that you're not looking into a black box and that you see, okay, as I showed you, we're trading real money. We have a lot of trades, and when we have the next call, you see even during the call you saw like a trade happened, right? So it's important just to show you this and also to explain you what we're doing, even if it's mathematical, quite complicated and can be quite tiring like you back in school, but it's like important to all explain that and show you that it's like at least based on a real fundament what we're doing here.
All right. Yeah, thank you very much, Sven. So I tried to answer as many questions as possible. So yeah, before we leave, I want to quickly to show my screen again because many people asked because where I can see the streamline bonus, right? So if you are here, so maybe I explain again. Some people also asked how I can deposit. Okay, if you are logged in, so if you're registered, you come again here you can here deposit with USDT on Ethereum, Tron, BNB, and Solana. And if you want to withdraw, you click here on withdraw. So you need to do it on your own, and you can withdraw only in Hype token on the Solana blockchain. But again, the Hype token is very liquid. So that means you can immediately exchange the Hype token also in USDT or in any other token. It's not a problem. We thought that it's let's say more convenient or more better to withdraw in Hype token, because we believe in Hype token that it will go long term up. And also we need to buy, so the company needs to buy the Hype token to give it for you as a withdrawal. So also from HypeRocket its side, they also we also buying the Hype token, right? And yeah, and also how you can see now the streamline information. You scroll here down, and here you see view details. Okay, you click on it, and then you scroll again down, and here you see the tab streamline. Okay, and here you see your position, your deposit rank. So if you are in the first 1,000, you will anyway here see that you are in pool 1, pool 2, and so on. Okay, here you see the the green checks that you are in there. Okay, and then every week there will be a payout of the streamline bonus. Okay, so I believe the next payout will be by the end of this week. Okay, so this is and how you can check if you are in the first 1,000 depositors or now the next top 5,000. All right, so that's it. Thank you very much again for this whole participation. Amazing. And we will do the next official webinar already next week, because we becoming bigger and bigger. I mean, we had today over 300 participants only only after 24 hours. So next webinar will be next week, and yeah, please join also our official Telegram channel, which you will also find in the dashboard at the top. And yeah, see you soon in the next webinar. Thank you very much. Bye bye.
Thank you very much.